Welcome everybody to the 40 Finance channel. My name's Jeff Beers, and today I'm throwing out some ideas for 5 value stocks to buy on the next market dip. We're seeing a lot of volatility in the market right now. There's a lot of people talking about a dip or a recession upcoming, maybe as soon as May or June. And so with that in mind, trying to look at a few stocks that might be good stocks to buy during a dip in prices. And that's what I have here today. So let's jump in. All right, first stock on the list today is the Disney Company, ticker symbol DIS. And Disney's had a nice run up recently, particularly when they announced the the streaming service that's coming out. They also had the sort of tailwind of the Avengers movie being so big. And now, of course, they found a buyer for their Fox Sports properties. So with all that positive news in mind, Disney's had a little bit of a run. And they're up about $20 or so in the past few weeks. Now, assuming that we were to have a stock market dip come up, I think what you can see is a great opportunity to buy Disney knowing what we know today. So at the price today of $132, you got a PE ratio of 14.75, which is a pretty good deal. And you have a dividend of 1.28%. If we could target Disney at $125 or less, try to come in at that level on a stock market dip, we know we got $8.95 earnings per share. That gives us a revised PE of $13.96, assuming the dip. So now you're getting a company that's strong, has had a lot of things going in their favor, but with the stock market dip that comes in, you look for a target 125 or under. That's when you start buying, and you basically get all the tailwinds that they've had over the past 6 months sort of for free, if you will. And you get an excellent dividend paying stock with a PE under $14 at that price. A lot of positive things looking ahead for this company, and I think it's an awesome opportunity. The S&P 500, historically, you're trying to get right around the 15, PE of 15, if you want to say what most historians would call an average deal for price to earnings ratio. So if we can sneak in with the PE of 14 simply by targeting a price under 125, then it makes the stock market dip a positive situation for us as investors. Okay, next on the list is another rock-solid company, Bristol-Myers Squibb, who of course is in pharmaceuticals and healthcare. Right now, BMY has a price of $46.33. They've taken a little bit of a tumble out of the gate here in 2019, but that's good news because they've already had a little bit of a chop-off. Their PE right now is at $14.75. We got an earnings per share of $3.14 and a whopper of a dividend yield at 3.53. So a lot of strong signals here. This is a really good stock to hide out in during a recession because healthcare typically is not going to be as impacted by that. But what we really want to do is get this for a discount if the stock market goes down. And so the target price I put together for Bristol-Myers was $42 or less at $3.14 earnings per share. And that gets us to a PE of $13.37. But you do get an awesome dividend. So even if the stock market is flat for a while, this stock will still pay off well. You're getting it at a good price. And the 52-week range on Bristol-Myers goes all the way up to $66. So if things turn around in the economy, things turn around in healthcare, you might actually see a nice growth to be had even in the short term. All right, next we're looking at one of my companies that I hold in, and that is the TJ Maxx company. And right now, TJ Maxx is at $53.40. They've had a really big run over the last 8 months, and it's been hard actually for me to come in and add more because I got this stock essentially in the neighborhood of $39. So trying to come in at that point or lower has been a little bit difficult, except of course for December when everything went down. So the target that I put together for TJX right now at $53.40, I'd like personally to see it go under $46 before I jumped back in because of the steep run up that it's had. I need it to really get in that $46, $45 range, and then I start getting really excited about it again. And at $2.43 earnings per share, that'll bring the PE down from the current mark of $21.97, brings it all the way down to $18.93. Things that I know about TJ Maxx is that typically as the economy performs a little worse and there's contractions in pay for workers, TJ Maxx is the kind of store that actually does really good here because of their sale pricing model and their sort of find a deal philosophy. So TJX, they're doing good right now, even in the good economy, but they're one retail play that can actually pay off when things are going south a little bit in the stock market. You do get a dividend of 1.68%, so just like the others, if things go terrible, you're still getting a couple bucks per share throughout the year. And so overall, I'm a big fan of TJX. I personally am looking at this stock as an opportunity to add more shares, and so I'm including it here. All right, next on our list is Constellation Brands, which is a beer and alcohol and wine gigantic conglomerate. And Constellation Brands has some real interesting swirl around it right now. The stock really can't figure out if it's going to go up really big or down really big. Right now it's on a small down cycle. They have a lot of ambitions for the marijuana industry and beverage infusion. So that's obviously an untested world so far, but there's a lot of people who are bullish on it. And probably the biggest thing for Constellation Brands that's working in their favor right now is their Mexican beer line. So Corona and things of that nature have really done well for Constellation, even though technically the beer world is chopped in 1,000 pieces with the craft beer phenomenon. Constellation Brands has actually pushed through that, whereas Coors and Anheuser-Busch and some of the others have struggled a little bit to grow their markets. So I like the swirl around Constellation Brands. There's another one that's just a rock solid company. It's never going to go out of business. And what you have today is a price of $200. You have a P ratio of 1139 and an earnings per share of 1757. You also have a dividend yield of 1.69%. So a lot of solid stats in favor for Constellation Brands. You also have a 52-week price range that goes all the way up to $235. So there is some potential there. I'm shooting a target at 190 or below for this stock as something to consider. If you can get it at 190 or below, you're basically getting last year's results for free, because that's when it started to see some growth in the it added the marijuana experiment to its portfolio. So you can sort of get all those things for free just by doing a price rewind underneath $190. And at $17.57 earnings per share, that brings your PE down to 1081, a price earnings ratio of 1081 for a company that is still growing its sales is a pretty darn good deal. And so this could be one to watch during the next stock market dip. Okay, last on my list today is Home Depot. What can we do with Home Depot during a stock market dip? I think everyone's aligned that Home Depot's a pretty good stock right now, just trading at $190. It also is on a little bit of a discount right now. You can see This year, it's sort of peaked up and it's kind of slipping down. No one can figure out which way the housing market's going or the consumer's going. So that's actually good news for the long term. If we get a dip here in the next 2 or 3 months, then you're talking about a pretty good opportunity to pick up some Home Depot shares. I'm targeting a price under 180, which in the 52-week range, you've seen a high as much as $215 for Home Depot. So not saying that we'll return to those levels, but if you can get it at 180 or below at a $9.73 earnings per share, you're looking at a PE of 1849. That's versus 1958 PE today. Also throwing a 2.67% dividend. You're going to go back on Home Depot. You're basically going to rewind the clock. You're going to get it at prices that it was trading for in 2018. You're going to get it today. So it's another one that almost regardless of which way the housing market goes, people forget that Home Depot will succeed. So some people look at new housing builds and they're like, well, you know, it's going to be rocky for a Home Depot. I couldn't disagree more, only because it's probably more of the DIY home gardener that supports this kind of place. So when people are staying in their existing homes, they're putting money into their existing homes and they're keeping places like Home Depot swimming in profits. So anyhow, those are the 5 stocks to look at in the next stock market dip. I gave you some price targets, some PE targets. Let me know what you think, guys, down below. I really appreciate you watching. Please like and share the channel if you can. I'll see you on the next video.